Right now, Nuburu Inc., ticker BURU, is trading at $0.361, exploding upward by 25.26% on the session. Most people seeing this jump are probably thinking it's just another chaotic, speculative penny stock pop, the kind of move you see on a Robinhood app trending list and then completely forget about by tomorrow. It's easy to dismiss, but the reality is this isn't just random noise. This 25% surge is tied directly to a specific technological milestone that, if it proves out, could fundamentally alter fabrication for the electric vehicle industry. This is a classic case of market expectation running headlong into a very complex technological reality. Let's be honest, for most investors, BURU is completely off the radar. It's a nano-cap company, barely a rounding error compared to the daily swings of Nvidia stock or Tesla stock. The common wisdom and the general market expectation is that stocks trading under $1 are lotto tickets, not serious positions. They're often seen as where capital goes to die, or where day traders try to scalp a few cents. The overwhelming expectation is that this is a pump and dump, a momentary flicker driven by a press release that will fade by the opening bell tomorrow. Another victim of a market that has no patience for companies that don't produce profits. But here's the problem with that blanket thinking. It ignores why blue laser technology matters. Nuburu isn't making a new social media app or a slightly better widget. They're tackling a core physics problem in advanced manufacturing. The reality is that the market is desperate for what they're building, even if 99% of investors have never heard of them. This 25% jump isn't just speculation. It's a delayed reaction to a very real engineering announcement that has significant implications for EV battery manufacturing. Today's massive move is pinned on one catalyst. Nuburu announced it has successfully built and demonstrated a 1.5 kilowatt blue laser. Now, 1.5 kilowatts might not sound like much when you're thinking about the power grid, but in the world of high-brightness industrial lasers, it's a huge deal. Here's exactly why it matters. Traditional infrared lasers, the kind used in almost all industrial cutting and welding, are terrible at working with materials like copper. Copper is highly reflective to infrared light, meaning the laser's energy literally bounces off instead of being absorbed. This is a massive, costly problem for EV battery manufacturing, which requires welding thousands of thin copper foils and tabs together. You need a different wavelength of light. That wavelength is blue. Nuburu is branding this new series the Nuburu AI line. Frankly, adding AI to anything right now is a smart, if obvious, marketing tactic. It gets algorithms, keyword scanners, and retail traders excited. But the real technology here isn't artificial intelligence. It's the power scaling. The company claims this new laser provides a threefold power brightness product increase. In manufacturing, that translates directly to faster, cleaner, and stronger welds on materials that are currently a bottleneck for the entire green energy transition. This isn't just a lab experiment. They are positioning this for 3D printing applications, especially with copper, and high-volume battery production lines. Now, let's look at the trading action itself. We are seeing trading volume that is multiples upon multiples of its daily average. This isn't Fidelity or Schwab Intelligent Portfolios buying blocks of stock for long-term holds. This is a flood of retail interest and high-frequency trading bots reacting to the news. The bid-ask spread is almost certainly wide, and the volatility is extreme. This is not a set-it-and-forget-it investment. This is active, high-risk trading. When a stock valued this low moves this fast, it attracts a separate class of traders who couldn't care less about the 1.5 kilowatt laser. They care about the 25% momentum. This creates a dangerous feedback loop. The initial move was fundamentally driven, but the scale of the move is being amplified by pure speculation. This volatility is where different investing sites and platforms create different experiences. On the Robinhood app or the SoFi Invest platform, BURU looks incredibly tempting. The Robinhood stock trading interface is designed to showcase these high-percentage movers, drawing people into exactly this kind of trade. But this is where sophisticated platforms differ. An advisor at Fidelity Wealth Management would likely tell a client to stay far away from this, citing the extreme risk and lack of a financial moat. However, a trader using interactive brokers for complex option strategies might see a way to play the volatility itself, maybe with options, if they even exist for a stock this small. For someone just doing basic online investing or self-investing, this is a very sharp blade. You will not find BURU in many Fidelity mutual funds or major Fidelity ETFs. The institutional ownership is tiny, which is typical for a stock of this size. This is a double-edged sword. On one hand, it means the stock is undiscovered and doesn't have large holders sitting on a massive cost basis, just waiting to dump shares and lock in profits on a small pop. On the other hand, it means there is zero institutional stability. There is no big player to absorb the shock if the retail crowd gets spooked and runs for the exits. This is the definition of a stock trading on its own narrative, completely detached from the macroeconomic pressures affecting, say, Apple stock or the broader S&P 500. So what does Nuburu actually do, and what's its history? They design and manufacture high-power blue lasers. That's it. It's a pure-play technology company. Their entire business model is based on the idea that blue light is superior for processing certain metals, and that this superiority will translate into a massive market share in EV, 3D printing, and other high-tech fabrication. This brings us to the expectation problem. Nuburu went public via a SPAC, Special Acquisition Company, back in 2022. And the market is absolutely littered with the wreckage of failed SPACs. Companies that came public with huge projections, minimal revenue, and then completely collapsed under the weight of cash burn and broken promises. BURU is no exception to that history. This stock has been decimated since its debut. It's down well over 90% from its post-SPAC highs. This context is critical. Today's 25% gain is exciting, but it's a 25% gain on a deeply, deeply depressed valuation. Early investors who held on are still down catastrophically. This history of value destruction means the market has almost zero trust in the company's long-term projections. Every press release is met with intense skepticism, and the company has to fight an uphill battle just to be seen as credible. They have a history of burning cash, and with microcap stocks, the threat of dilution is always present. They may very well use this price spike as an opportunity to raise capital by issuing new shares, which would flood the market and send the price right back down. This brings up a serious question about the EV supply chain. Comment below with what you think the biggest bottleneck in battery manufacturing is right now. Is it access to raw lithium, or is it fabrication technologies, like this welding problem? Let's look at the path forward, contrasting the bull and bear cases. The bull case, the new expectation, is simple. This 1.5 kilowatt laser is the real breakthrough. It gets the attention of engineering departments at major EV manufacturers or battery suppliers. Nuburu converts one of these into a pilot program and then into a small-scale purchase order. They then issue a press release announcing this first commercial sale of the AI series laser. If that happens, the stock would likely double or triple again on that news. This would give them the leverage to raise capital at a much higher price, perhaps over the $1 compliance level, minimizing dilution and funding their operations for another 18 to 24 months. This is the dream scenario. Now, the bear case, which is the far more complex reality. The risk is that this 1.5 kilowatt laser is a great press release, but it doesn't translate into sales. Maybe it's too expensive to produce at scale. Maybe a competitor announces a 2.0 kilowatt laser next month. The sales cycle for industrial hardware is incredibly long. It can take years to get qualified as a vendor for a major auto manufacturer. Nuburu doesn't have years. Their cash runway is finite. In this scenario, the stock surge fades over the next few weeks, drifting back down to 0.30, then 0.25. In 6 months, with no sales news, they're forced to do a highly dilutive capital raise at, say, 0.20, or worse, a reverse stock split, just to stay compliant with the exchange. This is the reality that haunts microcap investment. This stock is not an investment in the same way you'd build a foundation in your individual brokerage account with Fidelity ETFs or an intelligent portfolio from Schwab. This is pure speculation on a very specific technological outcome. It requires a different mindset, one that accepts the very real possibility of a 100% loss. This isn't like buying NVIDIA